The modern world runs on copper, yet even as demand is projected to grow substantially, bringing new production online has proven difficult.
We're going to be the first back into production by a long shot. We've got a short timeline to production. Go around the world and find somebody that's going to be producing the amount of copper, the amount of gold and silver that we are in 2.5 years. I'm going to tell you, you're coming back to the Yukon and it's going to be us.
Selkirk Copper Mines Inc. has paid Pinnacle Digest for marketing services, including producing and disseminating this video. Pinnacle Digest parent company owns shares of Selkirk Copper Mines Inc. This is not investment advice. Please read the full disclosure at the end of this video. The modern world runs on copper, powering cities, data centers, and electric vehicles. In Q4 of 2025, copper prices reached record levels as tightening supply met accelerating demand. Morgan Stanley forecasted that the copper market could see its largest supply deficit in more than 2 decades in 2026. And according to the International Copper Association, global copper demand could roughly double by 2050, from about 25 million tons in 2020 to close to 50 million tons. Yet even as demand is projected to grow substantially, bringing new production online has proven difficult. Ore grades are declining in many large mines, permitting timelines have increased, and the capital required to build responsible new mines continues to rise. This is resulting in a widening gap between the copper the world needs and what it can produce from mines. Which brings us to the Yukon, a region with deep mining routes, modern infrastructure, and a past-producing copper mine with a second chance to redefine its future. In the heart of the Yukon's Minto Copper Belt is the story of Selkirk Copper Mines, a newly formed, well-financed company, and its largest shareholder is the Selkirk First Nation. Together they are advancing a restart and development plan for the former Minto Copper-Gold-Silver Mine, grounded in best-in-class standards of environmental stewardship, mine development, and reclamation practice. During its 16 years of activity, the Minto mine produced more than 500 million pounds of copper, along with gold and silver as byproducts. But in 2023, after a period of financial difficulty and operational challenges, the mine was shut down. In the months that followed, the government of Yukon assumed responsibility for the site while seeking a new operator capable of restoring long-term stability. After raising about $40 million, Selkirk Copper aims to proceed with its plans to complete a 50,000-meter drill program, a series of trade-off studies, a feasibility study, and updated permitting at the former Minto Copper-Gold-Silver Mine, all in support of a potential restart decision targeted for mid-2027. The project includes a 4,100-ton per day processing plant, a 400-person camp, water treatment facilities, and both open pit and underground infrastructure. Its roads, power line, and infrastructure are located on or adjacent to lands of the Selkirk First Nation. Selkirk Copper acquired this project for approximately $6.4 million out of bankruptcy, compared to an estimated $320 million in historic investment in infrastructure and development here. Backed by the Fiore Group and the Selkirk First Nation, the company has since completed an updated 2025 mineral resource estimate prepared under NI 43-101 standards and is advancing a multi-year plan to redevelop, expand, and restart the mine. Today I'll be chatting with Colin Jodrey, President and CEO of Selkirk Copper Mines, to learn more about this project and its plans moving forward. Colin Jodrey brings more than 30 years of experience in the mining industry. Before joining Selkirk Copper, he spent over a decade as Vice President of Business Development at Teck Resources, one of Canada's largest diversified mining companies, where he led base and precious metal projects across the Americas, from preliminary economic assessment through feasibility, and oversaw numerous joint venture partnerships. Colin, thanks for having us. I want to talk about the question I think that's on many investors' minds. When you took over this past-producing mine that had gone bankrupt, what made you believe the Minto mine deserved a second chance?
Well, I think the main one is it was just an unloved and underappreciated asset. And we see that in a lot of the data and information that we've been able to collect through our due diligence and whatnot. I mean, that's one thing. We can see a future for this asset because we've been deep in the data. We got a good understanding of the mineral resource, and we've got a much better understanding of this facility and its ability to be a restart. I think the other reason that we're really excited, though, is the First Nation is leading us through this, and they're wanting to be our partner going forward. They saw a future in this asset, and surprisingly, it's the same future that we see. That doesn't happen very often. They're looking for a future for their community through mineral resource development, and that's what we do.
So what do you think led to the downfall, and what are you guys going to do differently?
This is a question that investors have been asking me every single one for the last 4 months. And it's pretty much the same answer. They just rushed back into production. They didn't fully appreciate the complexities of running an asset like this, and it didn't go well for them, unfortunately. We have a real advantage though. The bankruptcy has done a couple things. It's cleared financial obligations that were really significant. I mentioned in the past a silver and gold stream that was paid to a streamer. So 100% of the gold and silver here in this asset was paid away, not to the benefit of the operator. We now have that benefit. It's a significant amount of financial resources that prior operators didn't have. Give you an example.
Yeah.
If we take average run rates for this mill at average prices of 2025, it's worth over $40 million US a year that now come to us. It's a game changer for an asset like this.
Let's talk about the Selkirk First Nation. We're seeing more First Nations, take equity ownership in companies across Canada. Can you talk about what that looks like from a practical standpoint when it comes to decision-making, permitting, everyday decisions?
Sometimes what happens is you sort of forget about them a little bit, or you forget about community. We're not doing that. So we've already started the drill program. They helped us get the permit for the drill program because they know the permitting agencies. They've been around this asset longer than we have. They've been around here since 2007. They have the relationships, but they also have the vision. So that's one good example. But in terms of what we're doing, the planning and the engineering, they're in all the planning and engineering meetings. We're taking their advice. We're hearing what they're having to say and incorporate it in. It's not like we go away and do a study for 2 months and come and present it to them. They are making the study live. And that's really fun because it's dynamic, it's engaging, but that also is what the permitting agent needs to hear. We don't have to go through this two-step process on the permitting side. They know that the First Nation is there with us and they own the land.
Now, it's late 2025. Let's talk about timeline. I know this is a question you get all the time. How long until things maybe get started again? What does it look like from now until a production decision, and when do you hope to make that?
I'm going to say it again, just so everybody hears, we're not rushing back into production. And that because that was one of the major issues with the prior operator, but it's a pretty simple process going forward. We've already started. So you drill the resource, you get better information about the actual mineral in the ground. Then we produce mine plans that are coherent, both underground and open pit. We integrate that into a restart plan, and concurrent with all that, we get a new set of permits. So in the end, by the end of 2026, mid-2027, we'll have that information for the restart decision, and we see first production mid-2028.
Coming back to the previous operator for a moment, they cited water issues, there were other logistical problems, transportation costs ran high. How does Selkirk Copper plan to overcome those challenges?
For us, water's core to any mining asset. It's a critical piece of the puzzle. This is a great site, in all honesty. We've got storage capacity, we have retention capacity across the site, but you do have to manage it. It should come as no surprise to anyone that the snow melts in the spring and you have to be prepared for it, and then it freezes in the winter. We've got a really experienced team, we understand that. One of our key focuses going forward with the First Nation will be water. I don't see it as a huge problem. I must admit, I don't know why it was such a problem for the prior operator, but I'm not worried about it. We can manage it. Transportation, it was a challenge for the prior operator, and the main issue was really getting the concentrate reliably through the port of Skagway. Past history there has not been great. Maybe some of the prior operators in the Yukon and northern BC just didn't get the material through the port so well. We've been meeting with the port monthly for the last 4 months to try to develop a plan and create confidence that we know what we're doing and that they can accept that. And I have to say it's going really well. And the last thing on that is with this whole sort of global trade issues, etc., everyone's looking at logistics timelines. So the Yukon government is helping us, the Canadian government is helping, and so is the US government.
Now, everybody's going to be vying for that port, access to it in Alaska and the Yukon. What makes you think Selkirk is going to?
Because we're first. We're going to be the first back into production by a long shot. Like, we've got all of this facility here, we've got all of this gear, we've got a good resource. It's not where I want it to be, but it's still good, and we're going to make it better. But we've got a short timeline to production. Go around the world and find somebody that's going to be producing the amount of copper, amount of gold and silver that we are in 2.5 years. I'm going to tell you, you're coming back to the Yukon, and it's going to be us.
You just raised about $40 million. How are you going to deploy that capital? I understand, you got 4 drills turning, exploration is big right now, but kind of talk to us about where that money's going.
As we talked a little bit before, there's sort of these 3 main segments of the planning. The drilling is the biggest part. And it's a combination of definition drilling, resource expansion, and some new exploration just on the mine site. That's about 13 to 14 million of the 40. And then we've got two main studies that we're doing, the trade-off study, which will turn into a preliminary economic assessment. But then we have a feasibility study behind that. That's going to be between 4 and 5 million in total, those pieces. Then we have the care and maintenance costs of this facility. It's not a huge cost, but it will be a recurring cost. We have some relief there because the government's going to pay for part of it for the first 4 months of 2026. That'll be probably about $6 million. And then in behind that, we're doing facilities works and site projects work. So our restart decision is seamless. They call it operations readiness. So we're going to do some work on the ground before we make the restart decision that just makes that easier.
So looking out to a potential restart decision, how much capital might that cost?
I mean, obviously the trade-off studies and our PEA are going to get much more into that and we'll have a much better number. Right now, it's a pretty open guess. We're expecting it to be in the sort of $120 to $150 million for the restart. It seems like a big number, but the reality is it's not. And when you compare it to the rest of the industry, new copper is costing significantly more than that per annual ton of output. We think this will be about 20% of the industry cost.
And you released a new 43-101 in 2025. What did you glean from that?
A number of things. It's always exciting for me as a geologist when I get to go back to the rocks and sort of see how they present themselves in those mineral resource estimates. We had a significant increase in the mineral resource under both indicated and inferred categories than previous operators. We actually have more metal defined in indicated and inferred resources here going all the way back to 2016. And we're about 48% higher than the 2021 estimate. So it's a really great platform. We currently have almost 900 million pounds of copper, 500,000 ounces of gold, and about 4.7 million ounces of silver in that resource. That's just platformal for us, right? It's the start, but it's a really good platform.
And obviously this 50,000 meter program is designed to build on that.
You know, part of that program is to extend and expand existing known zones of mineralization. Assays are coming. But the other part is there's new discovery zones that we hope to be able to add quickly into that. And then lastly, there'll be a bit of the definition drilling. So we just get good coherent mine plans coming out of this next stage of work.
You mentioned something to me earlier that stuck with me, that no one had really done a longer mine plan here, 12, 15 years. Right. How does all this drilling play into that potentially, and what advantages might that create?
When you have an asset of this nature, a 5 or 7 year mine plan really doesn't do it justice. So what we've set as a target as a management team, let's try to get to a 15-year mine plan. But there's a huge knock-on effect around a bunch of things. The first knock-on effect is everybody wants longer. The community wants longer, the government wants longer. It drives a different conversation. It's a bit more optimistic.
A lot more tax revenue.
That's right. The second thing is, it's very hard to finance a 5-year mine, right? Because the financiers are going to look at the up and the down. If you have 15, and most base metal assets, that's what people are looking for. 15 allows you to get a much lower cost of finance, and that's what we would love to do, is sort of project finance as much of this going forward. That is great for shareholders. This asset can afford it. And at the end of the day, but the 15 years changes the nature of the conversation because we're not Johnny come lately. We've got a really good idea here and our job is just to deliver against that. And I'm excited because my whole career, we sort of had minimum 15-year mine lives. I'm a bit of an optimist. That's why we do this work. I can see potential beyond that.
You guys have some lofty goals. I want to look out 6 months, 12 months down the road. What are some milestones you would have investors focus on?
I think there's probably 3. So obviously the drill results is going to be a big important part of that. We expect to get an updated mineral resource estimate early Q2. So that's a pretty good signal. The second one though is we'll take the trade-off studies and we'll do the first economic update study that's been done for a while. So we expect that preliminary economic assessment to be done by mid-year. We will then start the feasibility study. And then I would expect that investors should be looking for a restart decision after that, which is probably early 2027.
Well, best of luck, Colin. Thanks a lot.
Appreciate it very much. Thank you.
To learn more about the geology and exploration strategy, we turn to Stacey Jones, Vice President of Exploration. With a technical background in gold and base metals, Ms. Jones has contributed to advancing several projects from early stage targeting through to feasibility, including her previous work at Sabina Gold and Silver's Back River project in Nunavut. Stacey, thanks for having us. 50,000 meters, that's a lot of drilling. What are some of the main goals of this program?
We have lots, and it's going to take a lot of a lot of little things that get us to those milestones. But first, it's about getting our team not only comfortable, but confident in our understanding of the geology. These observations and these good data that we're collecting now, that's going to roll into our new model. And that model is going to be the foundation for not only our resource update, but all future mine plans, right? So it's an important first step. And this is what we're really doing differently, is making sure that we put the time and effort into getting the details and ensuring that we have the confidence in our model to push to the engineers to get our mining right. Following that geologic model, we're really looking to expand all of our zones and ensure that we have the best efficient conversion from our inferred resources to that indicated to ensure we make that 12 to 15 year mine life. That's our goal. That's what we're here for, right? And then after that, after we get our understanding and after we hit our mine life, we're going to be taking what we've learned and applying it to the underexplored zones, making sure we refocus on discovery, which hasn't been a focus at this project for a very long time.
The Minto project obviously sits within the Minto Copper Belt. Drill down on that for us. Talk to us about why you believe so strongly in this project.
Oh, absolutely. Not only the district itself underexplored, but when you look at Minto, the Minto project, it's a 4 by 7 kilometer block. And we gotta be careful about how we combine resources, but inferred and indicated resources of 36 million tons for an aggregate copper about just under 900 million pounds. That's only in the southern half of the property. Hardly any of the northern half has ever been drilled or ever been systematically explored.
So what are you hoping to achieve here over the next 6 months, 9 months from an exploration standpoint? What are some of your goals?
I have a lot, a lot of goals.
What are the top 3?
My team are going to be tired. Yeah. No, I mean, apart from just being here and making sure we do the best geoscience we can, we have to convert the data we're collecting. We have to convert the observations we're making into our new geologic model, right? That's going to inform our resources. That's going to inform our new mine plan. That's going to set us up for all the future exploration we want to do in the district.
Thanks for having us, Stacey. Best of luck.
Oh, thank you, Alex.
The story of copper is the story of progress. From power grids to the data centers, driving artificial intelligence. But progress comes with pressure. Global demand keeps rising while new supply struggles to keep pace. With demand forecasted to double in the coming decades and persistent supply deficits expected, countries are rediscovering the importance of developing projects responsibly and close to home. Here in Canada's north, Selkirk Copper Mines and Selkirk First Nation are working to turn a former producing copper project into an example of collaboration, environmental stewardship, and renewal. As the global energy transition accelerates, electrifying transportation, expanding renewable energy, and rebuilding grids, the question isn't whether copper demand will rise, it's who will be ready to supply it.